all the way from Shanghai, is Susan Zhou, who is the Vice President from Rystad Energy.
Thank you, Daniel. Thank you, Paydirt, for the opportunity for me to share our recent findings for battery materials from Rystad Energy. So I will talk a bit on the supply side response to the falling prices and the regional aspirations in the past 1 year or two. Before we touch upon specific battery metals like lithium and nickel, I just want to have a bit of review on the market last year about prices, about policies, about the supply side response. So as we all know, we are in a falling market. All battery metal prices dropped very quickly in the past 12, 13 months after a wonderful 2022, when legacy miners as well as junior miners were so ambitious in the production expansion and the new projects explorations. So if we look at lithium price curve, the lithium price dropped about 80% in 1 year, and the price hit about $12-ish per kg at the beginning of this year. The price is recovering now, but we think it's more like a correction. But nevertheless, all the producers and miners could finally take a breath. But next questions we should think about is whether the projected production cut from lithium supply could continue despite current price recovery, and how aggressively we would like to see the downstream to destock this year. And for nickel price, similarly, it dropped 40% in the past 1 year. And as early as mid of last year, we started to see the supply side of nickel started to respond to the price downturn. And the cobalt price also dropped by 30%. And policies. So last year, there are several policies, regulations, guidelines introduced, clarifying about the requirements on battery mineral sourcing and outliers. Of course, the US Inflation Reduction Act and the EU Critical Raw Materials Act were in the spotlight, especially for the former, because it gives quite a big amount of incentives to EV consumers and the entire EV supply chain. But the question is whether they could, or how quickly they could, to reshape the battery raw materials upstream and middle stream landscape. Of course, in the first session, we heard a lot of information from the government levels, and we heard they will continue to push for the fundings and financing for the critical minerals. Maybe that could to maintain a decent growth for this progress. But one thing for sure, from the price perspective, all those regional acts and regional aspirations will prompt a kind of gap between the Chinese prices, which is still dominated the whole battery supply chain, between the Chinese prices and the regional prices. So we are going to see a wide range of the regional prices. So the low end, in our opinions, will reflective of the Chinese materials, while the high end will be more reflective of the materials which are in compliance with the regional requirements. And we have an ESG panel discussion yesterday afternoon, and we think such premiums will also be reflective of the ESG standards and traceabilities. So supply side, given the low prices, so we've seen supply side responded to the price downturn to various extent, but we can see for this year in our latest update, all the supply curve for critical battery metals are likely to fall in 2024 and even 2025. So let's just touch upon some critical metals, including lithium and nickel, which are quite abundant in Australia. Rystad tracks every operating month and those who have the potential to produce in the next 10 years. That's the way how we estimate the battery material supply. So in the last 3 updates, we can see from this chart, the overall supply curve is growing very quickly in the far future. For example, in 2031, our projection of the global lithium-ion output in that year has grown by 500,000 in March compared to the estimate we made in Q2 last year. However, in the near and medium term, as we said, because of the low prices, the supply curve for lithium might not be developed as quickly as we previously projected. So in the latest update, our projection for the global lithium-ion output in 2025 has dropped by 10% from last update. But one thing we need to know is that because currently the lithium supply landscape is very much dominated by the legacy brownfield projects. So any potential cut or existing production cut could be elastic. And if we look at the whole landscape of lithium mine supply, obviously legacy miners from South America, from Australia are less vulnerable to low prices compared to those non-integrated miners in China, as well as those startups globally. But another thing, based on our experience, is that any projects operated by Chinese companies, their production could be elastic. So given the current recovery of prices, that could be a downside risk for this year. And again, so if current price recovery stay a bit longer for this year, we might see the supply curve of lithium to hit an elastic case at 1.4 million tons this year from our base case projection at nearly 1.3 million tons. And fundamentals, supply-demand balance, is also changing in the past 1 year as we are seeing a narrowing surplus compared to the previous projections. And as for prices, the prices are likely to stay volatile this year because of the uncertainties in the production cut, given current price recovery, as well as the destocking appetites along the value chain. So for next year, we still think there will be a surplus in the market, and that is likely to put more pressure on prices. Now, regional. We are talking about the fundamentals impact on prices. How about the policy impact on prices? For regional prices, in the past few years, we are noticing a narrowing gap between the Chinese price and the regional price, say, CIF Asia lithium hydroxide price. So that is mainly because in the past 2 years, more and more Chinese producers have gained accreditations from the OEMs in their supply chain. So we have enough lithium hydroxide in the market to narrow the gap. However, given the emerging regional aspirations, ESG traceability requirement, and the lagged regional supply of those compliant materials, all of those could help to maintain or even widen such gap in the market. And we like to call it IRA premiums or like CMRE premiums, whatever you call it. But indeed, we are going to see these arbitrage between the regional and Chinese prices. However, we don't think such gap will be as wide as we saw in early years. After all OEMs need to keep their battery cost at a comfortable level for their consumers. Now, nickel. So nickel supply side has responded to the falling nickel prices quite quickly, like we mentioned earlier, like it took place as early as mid of last year. And at that time, the price fell below $20 per kg. And we started to notice quite a few Australian miners announce their production cut or their intentions to put their projects on care and maintenance in Q2 this year. And with the price continuing to fall towards the end of last year, some MHP projects in Indonesia have been impacted. We noticed some startups of MHP projects. They announced suspension of their projects, which was supposed to deliver production by 2025 or 2026. But overall, we are still seeing the MHP or the nickel output from those MHP projects will continue to grow given the low cost in Indonesia. Now for this year, we think the upside risks could relate to the demand growth, which is about 15%, and this rate is higher than our projection of the annual demand growth at 7%. So this gap, if such growth in nickel demand continue, and that will create a gap at about 250,000 tons of nickel, and that could be likely to turn the nickel market from a modest surplus to a large deficit if anything else remain the same. And the downside risks is about supply growth, which is about 10% in the first quarter, and this is much higher than our projection at 1% for primary nickel this year. So if the price downturn in the past 1 year and the price volatilities recently could not limit the production in China and Indonesia, we might continue to see the pressure on nickel prices throughout this year. Again, for regional supply, compared to other battery metals like lithium cobalt, nickel could be a real headache for OEMs and battery manufacturers. Because if we look at this landscape, the nickel sulfate production landscape, the announced project and the capacity from those announced projects is not helping a lot. So if there should be a change, then we need to see more integrated nickel operations to be boosted in the following few years. The introduction of Rystad. We are a research and consulting firm focusing on the energy sectors from the traditional oil and gas to the energy transition, including batteries. And our battery solutions uses a bottom-up approach to research and study the whole value chain from the upstream mining to the downstream applications. So yeah, that's from me. I hope give you a bit time. Thank you. Give you